What if I told you a memecoin platform is trying to raise $1 billion after extracting $700 million in fees from users? Or that the Ethereum Foundation just revolutionized how crypto treasuries operate? I'm Alex from Moonward Capital, and today's Crypto Pulse Flash update is exposing the growing battle between value extraction and community ownership that's reshaping crypto right before our eyes. Hey everyone, welcome back to Crypto Pulse, where we cut through the noise to deliver the insights that actually matter to your portfolio. In today's 6-minute update, we're covering three major developments sending shockwaves through the market: PumpFun's massive token sale plans, Ethereum's revolutionary treasury policy, and Circle's IPO oversubscription that signals institutional appetite has reached new heights. Let's start with a quick market overview before diving into what these developments actually mean for you. Bitcoin is trading at $185,165, down slightly by 0.39%, while Ethereum is showing strength at 2,621, up 0.28%. That's interesting because ETH is outperforming in what's otherwise a mixed market. XRP is down 1.81%, Solana down 1.41%, and BNB marginally down 0.17%. Looking at sectors, NFTs are up 3.49%, while SocialFi and ICM are taking substantial hits, down 9.91% and 8.39% respectively. But the real story isn't in these numbers. It's in three major developments that signal a fundamental shift in how value is captured in crypto. First, PumpFun, the Solana-based memecoin platform, has announced plans to raise $1 billion at a staggering $4 billion valuation. What makes this particularly interesting is that PumpFun has already generated over $700 million in fees from users without sharing any of that revenue with them. This raises a critical question. Who should own the platforms that power our digital economy? The developers, the investors, or the users who create the actual value? Our analysis shows this could trigger a significant rotation from Solana ecosystem tokens to ETH, as evidenced by the 12 consecutive days of ETH ETF inflows totaling $1.09 billion. In stark contrast to PumpFun's extraction model, the Ethereum Foundation just unveiled what might be the most sophisticated treasury policy we've seen in crypto. The new policy limits ETH sales to just 15% of holdings annually, maintains a 2.5-year runway buffer regardless of market conditions, and actively deploys treasury assets in DeFi protocols. This isn't just good housekeeping, it's a fundamental shift toward institutional-grade management, while maintaining what they call DeFi-punk principles of privacy, self-custody, and decentralization. Galaxy Digital has clearly taken notice, withdrawing 89,000 ETH worth about $234 million from exchanges, suggesting institutional accumulation is accelerating. Meanwhile, Circle, the company behind USDC, is seeing its IPO dramatically oversubscribed, reportedly 25 times more demand than supply. The USDC issuer is expected to price above its target range as it prepares to list on NASDAQ at a $7.2 billion valuation. This represents a critical moment for regulated crypto infrastructure and signals massive institutional appetite for compliant crypto exposure. So what does all this mean for your portfolio? We're seeing a clear rotation from extraction-based models toward platforms that align with user ownership. This is why ETH is outperforming despite the overall market being mixed. If you're holding assets in the Solana ecosystem, particularly memecoins, be aware that PumpFun's token sale represents a potential liquidity drain that could accelerate this rotation. For ETH holders, the Foundation's new treasury policy signals institutional maturity that should continue to attract sophisticated capital. The key indicator to watch over the next 24 hours is Circle's IPO performance. If it pops significantly above the issue price, expect this to validate the regulated infrastructure narrative and potentially benefit compliant stablecoin issuers and their underlying blockchains. Monitor Ethereum's price action as institutional flows continue to favor ETH over BTC. The derivatives market is showing consistently bullish funding rates across major assets, suggesting potential for continued upside despite recent corrections. That's your Crypto Pulse Flash update for today. If you found these insights valuable, make sure to hit that subscribe button and notification bell to get these updates as soon as they drop. I'm Alex from Moonward Capital, and I'll see you in the next update. Stay ahead of the crowd.